I'm literally hedging against inflation by owning real estate. And the beautiful thing is most of that trickles down to my bottom line because the principal and interest ain't changing on my loan, right? Some of the other expenses might go up a little bit, but relatively speaking, most of my rent growth goes into my pocket. And so that's why I tell people like the compounding stuff, we can talk about compound interest all day you want, but how about having, let's say 10 homes.
The military taught us discipline, it taught us leadership, but it never taught us how to really build wealth and income. This is the Active Duty Passive Income Podcast, and I'm your host, Markian Sich, a United States Marine turned full-time real estate investor and educator. I'm bringing you the most successful military, veteran, and military spouse real estate investors, entrepreneurs, and industry experts to break down exactly how they did it, so you can too.
Hey there, ADPI Nation. This is Markian Sich. Welcome to another episode of the ADPI Podcast. This one's going to be super cool because we got two guests from the same incredible organization called REI Nation. We have Chris Clothier and Jared Smith, fellow Naval Academy grad. And so we're going to dive into not only their background, the story of this incredible organization that I think all of you military families are going to benefit massively from, but also just we're going to bust some myths, some common objections you might have in your mind why you can't do this and why you can't get into the real estate game, even with all the crazy interest rates and everything that's going on. So we're going to talk about a lot of really cool stuff, and we're going to build out a yellow brick road. I want to give you guys a path and the next steps after this episode. So if you really are like stuck in a rut or you want to get your next or your first property, let's figure it out on this podcast episode with these amazing gentlemen. So, all right, guys, can you give us a quick, just like 30-second spiel on who you are, your background for those that don't know, and how incredible your organization is.
Yeah, my name is Chris Clothier. I'm one of the family members that started and owns REI Nation. Been working with passive investors for 2 decades now, and today we started with one property on day one, and today we're managing a little over 8,000 homes, $2 billion in value. We've got 2 offices, one in Dallas, one in Memphis, and we operate kind of the hub and spoke model. So from those offices, we operate into 8-9 other individual markets very close to all across the Mid-South, managing passive investments for investors that want to build passive portfolios. So I'm not sure how was that. I think that was close to 30 seconds.
Sorry, I'm like, oh, military, you have 30 seconds. No, I love that.
I like it because I can talk for a very long time. So it's good to keep me boxed in.
Same. You guys are going to have to help me out on that.
So I've also been in real estate investing for about 2 decades, but the difference between Chris and I is I've also been active duty for all of that period. So 2002 Naval Academy graduate. And during that time did submarines. I was on 5 different submarines, deployments, moves. I think my wife and I moved 12 or 13 times. I kind of lost count. But during that time, we had some great decisions. We had some rough lessons learned, but all those helped build into what started in 2017, some serious investments here in Memphis, Tennessee, where we live now, in single family residential homes. And we've continued to build on that through my last several years through retirement. And now I had an opportunity after retirement to join Chris's team here at REI Nation, which I've been introduced to them back in 2013, 2014. I had some friends that got their start here investing, and the rest is kind of history. And I really look forward to the opportunity to help train, coach, and mentor all of our fellow military veterans and family members out there that are interested.
That's awesome. I feel so sorry that you had to be on a submarine. I spent a day or 2 on that thing, but
I was never on a submarine.
No, I'm kidding. Yeah, to me it was wild because I was like, wait a second, we're flying in the water. Like that's what it was. That's so cool. So one thing that I heard, Chris, you mentioned was the word passive income. And boy, I'll tell you what, ever since I started ADPI, I started getting some, as the youngins say, side eye every now and then when I say the word passive income. And they're like, oh, sounds scammy, sounds all this kind of stuff, And I came to realize why personally was just, I think the internet is abusing the phrase, right? First of all, passive income is an actual thing. Like the IRS designates active versus passive. Like it's an actual thing. But then like functionally, I think we can all agree we're not really saying it's literally you do nothing and collect royalties. Although you have an amazing story about somebody who almost did that for 4 years, forgot they had it. But like, what do you when you say passive income, how do you explain that for, because we got military members, they're like, Jared said he moved 13 times, deployed a bazillion times. Like, how are they going to be able to do this while still in the military?
Sure. So for me, the distinction is all the real estate functions. Okay. So it's all, as an investor with us, you don't have to do the really hard part, the part that seems very risky because of lack of knowledge or time. We do those pieces. So the passivity is on the real estate side. I have a saying that you can never be passive about your passive investments. You have to manage them. It could be 1 hour, it could be 3 hours every month that you are aware, what's happening with your passive investments. But the passive part means that someone else with an expertise handles the critical decisions and the critical functions, and you earn income from that. A lot of people, where it gets abused, and I like the way you put that, is that they call passive income, somehow it's this replacement. It's this extra account of money. It's this, this that you can pull from and spend out of. I don't view it that way. This is passive real estate investing means you're receiving income, but that income is reserved. It is to cover all of the expenses of that passive investment you made in real estate. So you put your money into real estate, you leverage someone else's expertise to manage that for you. That's the passive part of it. You earn an income from it. Now your responsibility is that income is, for me, it's a box. It is specifically 100% for that property.
Okay.
It's not, house money. It's none of that. It's for that property. It's for that investment. So when I talk about passive income, what I mean is you will generate an income through someone else's work.
Okay. So I think that is a additional layer of distinction from even what I was saying. Is you're actually kind of like pumping the brakes and you're saying, hey guys, this isn't like, don't look at this as every single little stream from every property all of a sudden is now that's replacing your phone bill, that's replacing this. Like, don't look at it as a replacement. In fact, you're basically telling all the military right now, don't quit your day job. And I think that's important because it's a little bit of a reality check. And I think we're going to get into stories of how, really does make your life way better. It probably will help you transition way smoother out of the military. In some ways, like one of my properties literally has probably created close to what would have been my pension if I spent 20 years. Okay. So I like the way you're saying that is like, don't just go full into this planning on it being like this rolling replacement of your life. Right.
So a great analogy, man, is that I said it at the beginning. In 2003, we had exactly 0 properties under management, and we started and we sold 1 house and had 1 property under management. But we repeated that, and each day it was just, we just did what we were supposed to do. Now in a passive income scenario, there's not a lot each day, but there's a plan, and it's over time. We look up in 21 years later, we're managing 8,000 houses, not because we set out to have 8,000, but because we just did all the little things every single day, and it just compounded. All the work we did just compounded.
Oh my gosh.
To me, an investor should be patient and understand that owning real estate can absolutely change the way you are able to live in the future, the way you're able to retire in the future, the different things you can do in the future. And that future can come sooner rather than later if you take all the right actions along the way. Many investors, they get into investing thinking that I'm going to buy 10 houses and then they're going to replace my income and I'm going to retire and it's all passive. And it just, those stories, they may be there, but what's often forgotten is they started that process, 15 years ago.
Right.
And this is where you get.
So, okay. So we're talking about like you said, the word compounding, which requires time. Jared, 21 years, like what has that done for your real estate portfolio? Give us a little bit of a snapshot.
Yeah. So I started out in 2000. There was a show, I think it was like TNT or TBS or whatever. It was Flip This House, in the South Carolina based flip show. And we were like, we can do this. And we flipped that first house. We learned all kinds of lessons. We
Oh yeah.
used a credit card for all of our expenses because we had no money saving. I had no financial kind of teaching growing up. We split part tax parcels and we sold it, bought it, renovated, sold it within 3 months. Had a couple tax parcels that we sold off after I got back from a deployment on an SSBN. And that was kind of like our initial taste. And then we were like, well, this is easy. We're going to buy a home when we get our first duty station. So we bought a home in
Mhm.
January 2007. Well, needless to say, that wasn't a great decision because we were over leveraged and all the wrong things that I didn't know. I didn't have somebody like Chris to guide me on, hey, this is what you need to be doing. I got into the danger zone, not like the Top Gun danger zone, but like the real estate danger zone. So I had lost value and all those things just because there was unforeseen circumstances and I had to move. Well, fast forward to 2017, we had some pay down equity in that home because we were sitting at a 6.5 and 9% interest rate on those loans and balloon loans for a long time, paid those off. So we used a 1031. And from that moment on, we took a $65,000 loss from that residence. We had $65,000 of forced equity. We did a 1031. And today, from that amount, we have multi-million dollars of assets under management. From 2017, buying 3 homes, family residence here in Memphis area. And over time, and it's a different equation because it's different interest rates at the time. And, we're still at 4.5%, 5% interest rates on those investment properties. And we paid PMI on it, which is very similar to like a property with our properties. And that was a stretch goal for 10 years. And lo and behold, and 2 years later, we achieved that 10-year goal, which when you sit back and think about that power of having a goal and achieving it. So that's the power of what the investing has done for me and my family. And now we're just continuing to add on as we go.
Yeah. Both of y'all kind of touched on something that I'm very big on. I guess it has to do with like either the goal setting stuff. Like I'm becoming a mindset freak. I thought it was all, hippie woo woo stuff back in the day. But like so I actually did a talk at the last ADPI con on how the greatest predictor of your future success is your next success. And so, because it's kind of a domino effect, right? And, Sam Altman from ChatGPT, like he did this whole interview and he was like, the thing that's going to burn you out the most is if you fail. And when I was in flight school, I know that sounds funny, but like when I was in flight school, I was sitting there and I pressed the wrong button on the simulator and I swear this old instructor like almost slapped my hand. And I was like, oh, sorry, I didn't mean to do that. And like moved on. He's like, no. He's like, why'd you do that? I was like, oh, I just, I made a mistake. And he's like, well, don't. And I was like, what do you mean don't? He's like, you haven't practiced enough. He's like, you're not having fun, are you? I was like, no, sir. He's like, well, how are you going to have fun unless you're good at it? So what I'm saying is like, Chris, like you were talking about, you're focusing on the next success. That you got the next property and the next property. You don't necessarily have to plan. You didn't know maybe that your plan was 8,000 properties. Like, Jared,
No.
you knew that like, as long as you were going to long-term hold, and then you started implementing something I'm like a nerd about is tax strategy to where, oh yeah, maybe holding isn't always the right strategy, but knowing how the underlying taxes can help you roll the gains into, leveraging even more and multiplying even more. And I'll say like, Jared, like, was that something where, do you feel like just having that goal on its own, looking through that lens, did that help you find those opportunities? You know what I mean?
It,
Where it's like
abs-
just having it in the first place helped you get to it faster.
it did. We have what we call one card. So we have a little 3x5 note card, nothing fancy. You split it in half or fold it in half. One side you write a short term 1 year goal. The other half you write like a 3 to 5 year goal. And on the back you write your big fat hairy goal. on the back of it. So we have that on our refrigerator for the longest time. That way, every day it hits you in the face when you go get your milk or protein shake or water or whatever it is out of the fridge. You see that and you're reminded, and you have to take action, or else you're just failing yourself. Like the action and the goal is there. We have all the abilities to reach those. It's just a decision when you wake up in the morning. Do you want to make that change? Do you want to, make a move into that direction, or do you want to just look at your goal for the next 10 years?
Yeah. I think just the reminding, I mean, it's even like simple things. When we started like officially working with you guys, like one of the very important things was we need to have a channel where we will see each other, like in Slack or whatever. Like we need to see each other. We need to have at least a modality through which we can like touch base with zero friction. So like putting that on the fridge, to me, it's a similar thing. That's almost communicating to your brain, oh, reminder, that's a thing. Oh, reminder, that's a thing. And now that like sharpens that lens, makes that lens clear. I don't know. I'm big on just like at least, I think it's very important to be conservative in your goal, or like make them realistic, not conservative, right? But then, I mean, the magic really starts happening when the compounding happens, when you focus on the next step, and then you start seeing things through that lens. It's kind of like when you get a red car, all of a sudden you see those red cars everywhere. You know what I mean? You start seeing things because that's how you're thinking about. What about
I will
just
say,
Oh yeah, go ahead.
I was going to say, so once we reached that goal, and we reached it in early 2023, and my wife and I struggled for a while to figure out what that next set of goals was. I felt like kind of lost, right? Like we were transitioning out of the
Really?
Navy, didn't have those goals set. So not having that framework in place, especially for us military veterans, like it felt very uncomfortable, but it was
Mhm.
also challenging to come up with that next, like, what should that next goal be? And we're now getting to the point where we're restructuring our goals and getting that framework in place again. It's re-energizing us and refocusing us.
I see that so many times, even with some people close to me. Like it's typically sometimes during the transition process out of the military. The reason why I'm so passionate about real estate investing is because it gave, well, the education of real estate and the doing of real estate gave me an identity outside of the military. I've seen so many people I know that like when they're like, "Oh, what am I going to do when I grow up?" Getting out of the military, but it's because it's similar to what you're talking about, like those goals. Like, okay, I hit this, or I hit retirement. What do I do now? What is my like? Who am I outside of the like? And so it's not always that clear. And so, to me, part of the soft landing on your exit out of the military is making sure that the military isn't your only identity. You have something that you want to professionally grow and achieve. And so I think that's huge. That even if you want to do not only real estate, but still real estate, like I found it helping to ground me and having a strong passion. So I hear that. What about just like, so I think we're gonna get back to goals here in a little bit, but what helped REI Nation? I think we're talking about time. A lot has happened over the last 20 years. We're talking 2008 crash. Like when I first got into real estate,
Yeah.
I mean, and Jared, you bought your first house in 2007. Like when I first got into real estate, the first thing I told myself was like, I'm never going to make those mistakes. I actually made a couple of those. But or just the interest rate stuff, bananas, right? Like who knew that was going to happen in 2022, right? What do you like? What sets your all's either mindset or operations or how you approach real estate different from those that just they failed?
Yeah. There was a couple things. One is that I don't ever mind telling anybody that I was a very poor investor, and I was a passive investor from the
Mhm.
beginning, but I made many, many poor decisions. And there was not a company like REI Nation didn't have the reputation we have
Right.
today. Okay. And when I first got started, I was buying not through my family's company. I was buying from other people and then bringing them into us to manage. So I was still buying them passively, but bringing them in because everything we were doing, we were giving to all of our clients. Okay. To kind of set the stage there. I was a very bad investor. I made bad
Okay.
decisions, and I paid a heavy, heavy price 2008 to 2010. And that informed the way that we are today because I made these bad decisions and I dealt with some bad people. There's no other way around it. Their priority was not my success. Their priority was transactional, get some money and move on. So in 2010, what sets us apart today, we made a shift and we decided we didn't want to be and I don't mean this in a negative way towards Walmart, but we didn't want to be the low price leader. We were not the Walmart of real estate, period. We were not going to operate in the most challenged areas, any of our markets, because it was difficult to maintain any type of consistency up in the Northwest. And the name is escaping me right now, but all of them are known for highest level of customer service and highest level of quality. They just set themselves apart from options. Same thing with high-end restaurants or whatever you want to say. So we set out to be different. We wanted to be a category of one. Nobody else was like us. And we determined every other company out there, every other real estate company that was working with passive investors, they could all fight to the bottom. The only value they brought was we can slash prices and be cheap. And we were not going to be that, period. Today, I can tell you that we are truly, as sloganish as this sounds, we're a customer service company. We just happen to be in the real estate business. But our number one job is find out what their expectations are. Then determine, can we meet that expectation? And a lot of times we can't. And the best thing we ever do is tell somebody, no, we're just not the right fit.
Yeah.
Because by doing that, we're able to focus on those where we are the right fit. And what happened 2010 to 2022, before 23, before the interest rates fell, 65+% of our sales every month went to an existing client building their portfolio. We didn't have to advertise. We don't sell. Jared does not sell. We get on the phone and we attract investors that their mindset is, it fits with ours. Their expectations and the results they want, they fit with what we can achieve and deliver. And then the biggest thing that sets us apart is that, especially for your audience, that we call investors on a routine basis, because most of our investors, they're not in the Mid-South, or if they are, they're not near the homes they're investing in that work for us. We are on all the details of your portfolio. We will call you on a regular basis with regular updates. We're always accessible. So we want investors to feel like they bought the house next door, but the reality is they bought it 1,500 miles away. Again, especially for service members, focus, do what you do on a daily basis, your job, be, excellent at it, and trust that you hired the absolute best of the best in this industry for your portfolio. That's because we matched. The other thing is, and it happens a lot of times, as I noted earlier, we're just not the right fit, and it's okay. Jared's number one job is to help point investors in the right direction that aren't the best fit, because then a majority of his time is spent with those people who we are, and they feel it. They feel that customer service. They feel that lack of sales, that lack of sales mentality. There's no churn here. There's no transactional feeling. It's very much, if you're attracted to what we provide, we have the homes. We buy 80 to 100 homes a month. And so we're always, some of those houses will sell retail. Some of those houses we'll hold for selling a year or two from now. The rest of them are all going directly into a client's portfolio, but we buy it first. We risk all of our money. We risk our time to stabilize that investment, so that when an investor is attracted to what we bring, it's there and it's ready and it fits. That's the thing that separates us from everyone else out there. And I don't mean that as a knock on any other companies. It's intentional. This is intentionally the way we operate. There's nothing special. I'll tell you this, there's no secrets, none. It's just, we have a certain set of values that we follow in the way we operate, and it's good. I've always told Jared that we have a abundance mentality. We will attract all of the investors because we know that what we do fits a very particular mindset. It fits a demand from a lot of investors, but not from everyone. So let's focus on attracting those that it works with, assist those to get in another direction that it doesn't, and we're good. And we've done that since 2010, and we're not going to violate that. That is that's our
North Star,
SOP.
Yeah. Gosh, no words. I love all that. It's funny. I can always tell when somebody is rooted in core values, because that was a big shift for ADPI as an education company. I always thought core values like were something that, I'm walking down the halls in my squadron or unit and it's just something on there with an eagle. And I was like, that doesn't mean anything, or like undercouraged commitment for the Marine Corps. Like, it was just a thing that some old guy said 300 years ago. And what does that like really mean to me? And then when we deconstruct, like personally, the way we built ours was in the US model. So we like deconstructed the cream of the crop of the best characteristics of our team members. I had like 1,000 words. Then we like just cut it all down, distilled it to like 5 words. And like, it's crazy how like it's a part of my DNA. When I talk to somebody, like, do they fit? Do they not? Do they fit? Do they not? And so I can tell that like you guys are like, that you just stick true to that. People that do fit will you attract them. It's a magnetic thing.
Can I share one
Sure.
quick story? I promise I'll keep it short for all your listeners. That look, as an example of that, our number one core value is, and it's words. It's always do the right thing, which is, how do you know what that is, right? I mean, but but it's not like we wrote it out. It's always do the right thing. That's what guides us. As a management company, the number one revenue driver in any management company is when a property goes vacant and you release it, because it's the biggest chunk of money you receive in a management contract, right? So, and often good companies, they'll keep the entire first month's lease as that's their and that's the biggest revenue driver in any management company, hands down. So management companies have to have vacancies. They have to. Of course. If there's no vacancy, there's no release. On our side, and look, size helps. So because we've been, so long in business and 8,000 houses under management and the volume that we do, it's like this circle that feeds itself. We actively work to eliminate move-outs, to eliminate vacancies. We are successful. 83% of all of our leases, everything's a 2-year lease. 83% of those renew into an additional 2 years.
That's wild.
So, and it's by design. This last year, for numbers for everybody on the call, this last year, we prevented 2,800 move-outs. That's how many homes were scheduled to go vacant that we prevented it. We extended the lease. The average rent is $1,500 and we keep the first month's lease up fee. So in essence, we said, I do not want to make $4.2 million in lease up fees. I want to instead renew this lease. And the average, when you have a move out, an investor loses between 3 and 4 months revenue with vacancy and then getting it released and then paying for that first month's lease up. So for us, the real value of this is somewhere between $12 and $16 million in rent that the owner receives. Like I said, 4.2 of that is money that they would be paying us. Yeah. The rest of it is money they would lose while it's vacant. And what happens, if anybody that's watching right now would say, that's insane. Why would you give that money up? Well, because that's why we have so many investors come back and buy from us again, because it's a consistent, reliable experience they have. And not every, as I just said, not every lease does it. 17% don't renew. And out of that, 3% actually fail. So 3% will not fulfill the entire 2-year lease. That's part of real estate.
Cost of doing business. Yeah.
Yes. 14% complete the lease as normal and move out on a regular basis. But 83% of the signed leases, they renew. And that's our job. Going into this month, we set a new goal. We said we want that to be less. We want that to be 85%. We're pushing our team to do better because it attracts. That's that whole attraction thing. It attracts people that say, that's what I want. I want that type of, congruency and sharing of, I guess, kind of alignment of interest. And it's not easy to do. It took us time and we sacrificed a lot to get there. But today it doesn't feel like a sacrifice at all. It feels like that's culture. That's core value. That's like, hey, if I do this, it's the right thing for that investor. And if I do the right thing enough times, it'll come back. We'll grow. And we are. So, I just want to share that piece because I think that's important
That's all you
distinction
need. Like,
in what a
honestly,
core value.
guys, all you need to know about REI Nation. Like, and I'm saying that from as somebody who builds an education company, right? We It was so difficult for us to figure out, um, because I don't have an MBA, I've never done this before, to figure out how do I ensure that our members succeed, but that I'm also a profitable business. Oh, and by the way, the military community is like, wait, why are you charging veterans? Like, well, this everything should be free. Where's my military discount? And the way I look at what you just said, it was basically a master class. When you are rooted in your core values, it'll help you develop what Jim Collins calls your economic engine. Like the one number that if you focus on, everything happens. Everything will work out. It's that tip of the iceberg. Everything underneath works out. You just need to make sure that one number works out. Now, to me, in real estate, that's cash flow. Like if I know, like, hey, it's breaking even at least, everything else is going to work out. I'm going to have somebody paying off the debt for me. I'm going to get some tax benefits. I'm going to principally, or the appreciation rather, everything's just going to work out as long as I have cash flow. With the investors that you bring on, specifically military, how do you approach like the analysis of these properties? Because let's just say they fit your mindset, right? And they're like, okay, I want to buy a property. I want to help me run the numbers. I want to know if this is something I want to buy. I'm also worried because I might go on a deployment of 6 months. There's no way that my spouse can deal with this property while I'm gone all the time. Like we got 3 kids, blah 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 blah. And if you may, I would love for you to tell the story about the self-directed IRA for the 4-year self-directed IRA story. If you know what I'm talking about. Was that you that was mentioning it? Yeah,
Yeah.
I think so.
It was me. Before I do that, though, I would love to just add one thing to what Chris was saying from I have a little bit different perspective, not having been here for 21 years,
Yeah.
but one of the true values that we can add is this management piece, and not the property management piece, but the portfolio management piece. I say that because for a long time, I tried to manage my TSP and I'd move stuff from the S fund to the I fund to the F fund. Every single time, I either ended up breaking even or ending up lower than where I was. It wasn't until in a recent position post Navy that I actually hired a professional to manage my investment portfolio inside of my 401k with that company.
Right.
And lo and behold, it performed much better than I ever would have dreamed that it would have achieved.
No
Similarly,
kidding. Okay.
I look at people's investment portfolios and able to help them maximize that. So how many of you on this that are listening to this podcast have gotten a call from your property management company or from your spreadsheet to help look at that? What's the return on it? Equity. Like, what is your money doing as it's sitting there? Has somebody advised you on, here are some things that you can do to supercharge your portfolio to get you to that next level? So that's, and I don't know, maybe Chris, we should start charging additional property management fee for that.
So this is
that tongue in cheek.
portfolio management is what you're saying.
Portfolio man.
What a lot of people call a turnkey company, meaning let me just preface this because I just realized, like, holy cow, let's set the stage. A lot of our members might not exactly understand what I'm talking about here. And then we'll get back to what I was asking you, Jared. Turnkey properties, and I'm just going to give it the Markian opinion on how this is. Is it you guys do all the heavy lifting, you do the flip, and then you pass it on to an investor with the beautiful wrapping of an hopefully awesome management solution, right? And so my first property was a turnkey property. I never saw it. I got mailbox money every single month. It was the most passive thing I've probably ever done in my life, outside of the TSP. And then it helped me when I had my VA loan tied up. I was able to take some of the proceeds. I sold that and buy another primary residence that made me $80,000 later. So like, all kind of building blocks, right? So that I just realized, like, maybe we needed to cover that earlier. That's bad on me. But am I missing anything? Is there something that's like, hey, this is what a turnkey is? Because we're about to get into how military can dive into this.
I'm just going to say one thing because I'm passionate about this. The word turnkey in today's environment has lost all
kind of like
meaning.
passive income, right?
That it is, yes, it's so abused and overused. But as for your listeners, a great way is the way you just described it. Someone else takes 100% of the risk on the front end. They identify, they renovate, and it needs to be renovated to a high level. And then they sell that property once a resident is in place to an investor. Then they have in-house, under their roof, a management company that the investor can hire to continue management. They're two separate pieces, but under one roof. That is how we started. We started using the word turnkey back in 2007 in a magazine about real estate investing. I'm not claiming that we founded the word here, but we were an early pioneer of this is what it means. It means that someone else has taken all the risk for you. You buy an investment where all the heavy lifting has been done, as you noted. And then now I can hire, because I own it. I can decide anything I want to do. I could sell it tomorrow, but I can hire a in-house management company. And the reason why that's important is that when things go wrong, and they always will, 100%, like no one's perfect. There won't be a bunch of, well, you bought it from them, so go ask them. Or I sold it to you, but they manage it. Go ask them. No, it's, you know what? The buck stopped right here with me. We bought it. We renovated it. We manage it. So if there's an issue, we own it.
Big deal,
and
guys.
that's really
all
important.
You listeners, that is like, I love that he said can. I think it'd be crazy not hiring the same, like, because they have the reputation. I mean, we actually worked with turnkey companies at the very inception of ADPI.
Yep.
Wow. One of them was so bad. Like, you talked about bad people, blew my mind. They literally made up what they could get in rent just to hit the 1% rule, because they knew that they were going to sell it based off of the 1% rule. And that that BS, amount that they were able to sell the property for created enough buffer to where they could keep it vacant for 2 years if they wanted to. So it's the who, not how, having the right people in your corner to then have the buck still stop with REI Nation after you get a that is the right way to approach this thing. If you're in the military and you're like, I'm not comfortable in taking on that much risk right now. Financial risk, time risk, whatever risk. That's what a lot of people I think they don't calculate. Like, oh, well, look at this money they're going to make off of me. I could do that. Okay. Yes, you could. Right. Yes, I got it. I'm hard-headed. I'm like that. I like learning my own lessons. However, are you comfortable with taking on that much risk? How are you going to pay for that risk? It is, and early on in my career, I was not comfortable with taking on that risk. And I also wanted to do what we talked about earlier. I wanted to have one success under my belt. That gave me so much wind in my sails. Getting Jared, next to where it said Marine Corps officer on LinkedIn, I wanted it to say real estate investor so bad. That's all I wanted. And I failed so many times. I was like, screw this. I can't handle all the bad people out there who are lying to me all the time. I just went and bought a turnkey. And then that changed everything for me, because and I'm not saying that that's like necessarily always the solution or the easy way out. And that was me. That was what put wind in my sails.
And it's true. You're valid. You are a real estate investor. 100%. You own real estate that provides a revenue stream to you. I mean, that's bought it for it's not invalid at all. I cannot tell you the number of people that start buying turnkey. And I'm going to remind everybody listening, if you were to buy a property through a turnkey company, and again, we'll just use us. If you were to buy a property from REI Nation, that doesn't preclude you from doing a fix and flip.
Right.
That doesn't preclude you from doing some other, it's just, the beauty of it is the heavy lifting is passive. So do what you do every day. You're still earning over here with us. You're still building a long-term, piece of your wealth over here while you continue to do whatever it is you want to do as an investor or as, a military member or whatever you're doing, all of it. It doesn't mean one or the other.
Yes.
It's just, right.
Yeah.
Yeah.
No, you're right. We focus on that a lot too. It's just funny you're saying, because we're like, yes, you can buy a home with your VA loan. Yes, you can, but yes, and do this and that.
Right.
All right. So yeah, I want to
The
give Jared the floor because I'll
Yeah.
talk too much. Chris, you're just like me. Like I need to hear these stories, and I want to know like, okay, right now we're 43 minutes in. What can a military member do to make this happen for themselves?
So, well, do you want the self-directed IRA story?
Yes, I want that
The
story, and well, specifically because I don't think a lot of military members even know some of these tricks. I mean, to me, here's the difficult part. For me and you, we're like, oh, that's almost. We think that we hear it so much, we don't realize how light bulb moment that could be for somebody. Everything from like taking a TSP when they get out to rolling it into an IRA or a 401k and being able to self-direct it into these properties. Or you can be crazy like me and just liquidate your IRA while you're active duty. Have USAA have to call their manager to make sure you're not crazy.
Yeah, one of the powerful tools, we worked our entire career. We're saving through the TSP, and that's the vehicle that we're going to lean on once we get out of the military. You know, an option is to roll over into a self-directed IRA. There's some paperwork that you have to fill out. So, there's a
Right.
little barrier to entry of, sending some emails and filling out some forms and things like that. But if you have a plan of execution to do that, and, I would come up with that plan first before you just throw your TSP into a self-directed IRA. Because if you just do that,
Oh,
it's just going to sit
absolutely. I
there.
love that you mentioned that. Have a plan.
Yeah, it's going to sit there and be
Yeah.
stagnant until you're able to execute. So what a successful rollover to me is, you come up with a plan, and it only takes a few days or, maybe 2 weeks to execute that piece. So that can all be done inside of a contract date, contract time frame, 4 weeks,
Oh,
6 weeks,
from when
whatever.
you sign the contract, by the time the property closes, you're set up and ready, right?
Yeah, you're set up and ready, and you're ready to go. That money's there. It's just a matter of moving it. So we had a client that did that, took their 401, made it into a self-directed IRA, and there's different loans and things like that are associated with those. And that's probably a topic for a whole other podcast. But if you have that money in there and want to supercharge it with real estate and have that money funnel back into your self-directed IRA, like, that's an option. So we had an investor that did that, had purchased 4 homes in 2019. Because it was in a self-directed IRA, they didn't have a lot of motivation to like go and look at that account. They put it in there and they're like, hey, and whenever I need this at some point down the road, I'm gonna take a look at it. So, they got to kind of where they were towards retirement age and wanted to be able to use some of that money. 4 years later, they had never gotten a phone call after the initial 4 months or 6 months that REI Nation does our phone calls, because after that, it's only kind of like if you have problem phone calls.
Yeah, not a bad phone
They-
call at least, right?
no bad phone calls for 4 years. The guy pretty much forgot that he even had these rental properties. He calls me. He said, "Where's my money?" I said, "What do you mean, where's your money?" He said, "I haven't gotten a payment." I was like, "Oh, this month's payment hasn't come in." He's like, "I'm looking at the account where I think it's supposed to go, and there's not a payment for the last 4 years." And I was flabbergasted. So I immediately went for our finance department, which is pretty close to where we sit, and started doing some digging. And they said, "Oh, well, here's this gentleman, here's his accounts, here's his homes, and it's going to this account at XYZ Bank." So I go and talk to him, and lo and behold, it takes him like 10, 15, 20 minutes to log on to this account, because he hasn't looked
Right.
at it
Recover the password. Like,
yeah, doesn't know the password, literally as passive as you can get. And I'm excited at this point. I'm like, how much money is in there? Like, oh my gosh. Meanwhile, his rents have gone from like $1,000 to $1,400 over that same
oh
amount of
my
time over the
gosh.
last. So he finally gets in there and he's kind of like, a little bit let down. And I'm like, oh man, like something bad happened. And he's like, well, I have a good chunk of money in there, but I forgot that I took $38,000 out of it last year to pay for some big event that he had. It was like a home remodel or something like that. So not only was he not having to worry about these properties, he was using this magic money that appeared in his account,
God
and
bless this
kind of
guy.
even
I don't
forgot it was just either with the real estate, right? So it's a wild story, but yeah, I think it really depicts, what that process can look like on the successful end. And, just a average investor with REI Nation and, what success can look like for somebody.
Gosh. Okay. I want to touch on a couple of things there. One, this guy used a self-directed retirement account, which, like you said, Chris, I think we could do a whole podcast on that. And we actually did the last one was about TSP versus real estate. So I'm not going to dive too far into that. But if you're listening to this and you're like, hey, I want to do that, or hey, I have friends and family that have a 401k from one random job that they forgot about, or an IRA that they're not really supercharging. It's just chilling at maybe an average of 8%. And you're like, you want to get them involved, maybe then partner with them by way of helping them get involved. Like that's a strategy. Then just go to activedutypassiveincome.com/IRA, like, a Roth IRA, whatever. And we got awesome partners with NCH, and they'll basically set all this up for you. So then you can go to REI Nation, which I'm actually going to make a special link for that. We're just going to call it activedutypassiveincome.com/REI. And well, that'll be ready by the time you guys listen to this, and you'll get connected with REI Nation. You set these two things up, right? And either for you or your family members, your friends, figure out if you can partner in ways with them, whatever you want to do. This is like the cookie cutter, almost yellow brick road thing that got me started. Okay. I wish I knew I could have done that with my IRA. I didn't know that was a thing. I called USAA. The guy was like, I need you to talk to my supervisor. I've never done this before. I talked to the supervisor. He's like, you're going to pay penalties. I was like, yeah, but I need to be a real estate investor. So give me my money. And it paid off. But so I just wanted to give, just some very direct calls to action. Like, guys, go to those two links, activedutypassiveincome.com/IRA, set up your IRA with NCH. They're going to take care of that for you. Then go to activedutypassiveincome.com/REI. We'll make sure that you're connected and taken care of. We'll be in your corner. Jared and Chris will be in your corner, their whole team. If you feel like this is a little bit over your head at this particular moment, or maybe it's not that it's over your head, it just sounds awesome. You have people managing your properties the way they do. They did all the renovations the way they did, and now they're constantly managing your portfolio for you. Go and do that. This is what got so many military members their start. And it's just amazing to have an organization that's been essentially vetted through the test of time. And you don't have to take my word for it. They've been around for over 20 years. That's all you got to know. So just huge. Now, back to what I wanted to touch on, rent growth. That is just such an unsung, wonderful thing, I think sometimes. I mean, especially like when I hear, I am honestly almost never angry about, like, personally about inflation. I'm like, yes, I get the grocery bill is going to be higher. Yes, I know that's not good for our country, but also baked into that means my rents are going up. And I'm not a slumlord. I'm just hitting market rates. I'm just making sure my rental is priced just like anything else in its market. I'm literally hedging against inflation by owning real estate. And the beautiful thing is most of that trickles down to my bottom line because the principal and interest ain't changing on my loan, right? Some of the other expenses might go up a little bit, but relatively speaking, most of my rent growth goes into my pocket. And so that's why I tell people, like, the compounding stuff, we can talk about compound interest all day you want, but how about having, let's say, 10 homes, 10 people paying off the loan for you, like hundreds, maybe thousands of dollars for each one of those. In your sleep, people are paying that reverse savings account for you. Every year or every 2 years, in your case, your rent might go up like hundreds of dollars across, maybe sometimes maybe it's $50, maybe it's $100, maybe it's more across multiple units. Oh, and then by the way, appreciation over time. I mean, real estate is when this stuff clicked for me as, like, a third generation immigrant trying to figure out how is America this awesome financially compared to, like, where I originally came from, Ukraine. I'm like, I don't get it. This is the stuff. I mean, this is, to me, the cornerstone of American wealth.
Yeah, it grows. I have to tell you, it's not, and you nailed it. Like, when rents go up once, of course, there's always little fluctuations, but let's just look over time. It goes
Yeah.
up and to the right. And that when rent goes up, it doesn't just, it didn't just go up. It went up for January and then it stacks. You'll get that for all 12 months. And then if it goes up again next year, it stacks on top of that in perpetuity as it keeps going. It's, so often investors, and this is a problem. Again, it's part of the salesmanship that they get tied up in a piece of paper and a
I
calculation.
know.
And the reality is, I've found that 99% of the success of investors who you're doing business with, are they bringing you the right assets in the right areas that they know how to make consistently be managed? Because piece of paper won't do it. It just can't tell the story. It can't calculate rent growth, the compounding of that rent growth. It can't calculate the fact that not only when you put 30% down on a piece of property, you put 30% down to own 100%.
Right. Leverage.
You get to now benefit not on 30% of the growth, but 100% of the growth. So you only put 30% in to own 100% of the investment. And as it goes up in value, as the rents go up, at every piece along the way, you get 100% of the upside. And you nailed it earlier I think it's so important to understand that the right investment, every dollar to own it, to operate it, to fix it, to hold it while it's vacant, every dollar to do all of that is provided by the resident along the way. So that, to me, the two things that mark a successful investment to me are, number one, I'm getting my money back. I have this high belief in the property I'm buying and the company I'm working with that I'm not losing money. I'm getting every dollar back out of this at some point in the future. That's number one. Number two, now I just want to maximize what I can make. I don't need to make the most. I don't need to be the riskiest. I don't need to beat it every month. I just need to have a high level of confidence that who I'm doing business with, they're going to maximize what I make over time. And that's what happens, to Jared's point a second ago, that if you just not even being aware of it, it's with the right company doing things the right way. It just, the likelihood that you will grow over time if you build out a portfolio of multiple properties is high. It's high. And it's proven out to be one of the absolute best ways to hedge against inflation and to, at a minimum, positively alter your future.
Yeah.
Provide a positive future that you just can't get through other investments. So I'm, again, and everything I'll talk about comes from a standpoint of my experience. So
You don't sound pissed at all, Chris.
um,
No,
look,
yeah, Jared.
go ahead.
I was going to say, just before the 15 minutes before this podcast recording, I'd sent out an email to current client, existing client. They purchased 4 homes in 2018, 2019. And in that email, talking about that management piece, it just laid out hey, you have 4 homes. You now have, just if they're 100% leveraged, even at the price that you bought them for, you now have over $300,000 of equity in those 4 homes over the 5 years, which I know is based on if a 30% down payment or 25% down payment, that equals more than what they put into it initially. And nobody's taking that asset away. That's a hard asset that they have now and forever until they decide to sell that home. So what are they going to do with that $300,000? Maybe that'll be on the next podcast, just to see how we can, supercharge these portfolios.
Yeah, I love that idea. I would love to have a actual real live case study coming on with you in the future and going over, because I think, so you talked about leverage, Chris. I talk about confidence and leverage together. To me, that's like magic. Like when you have confidence and you know how to leverage. And so I think a lot of times confidence comes from just seeing somebody else doing it, right? That's why I was so big about building a community. Right. I just wanted another military member to look to the left and the right digitally, in our community space or on Facebook and be like, holy cow, they just did it. What I mean, why can't I do it? And so I think that'd be great. And, we're coming up to the end here. Do you have any I don't know, just a case study or an awesome little golden nugget story that you have about somebody in the military that you're like that? Because you said you mentored so many people. You did the, what is it called? I almost said kangaroo court. That's not the right thing.
The Roadrunner Real Estate Readiness
The Road
Group.
Runner. There you go.
Yep. The USS New Mexico. Every Sunday we met twice. So I made it available to everybody on the crew. But I had probably 15 to 20 faithful attendees of that. I ran it with one of my chiefs on board who had a fourplex in Norfolk. And I was the single family side and had done all the renovation and all that stuff. Just an example of one of those sailors. At the time was a CS2, so culinary specialist second class. He got mapped on that deployment, so he could cover all his, needs for repairs and all that stuff, and moved into a duplex with his new fiance that he just got engaged to after the deployment, and now get married and live in one half and rent the other half out. And like they got past the initial barrier to entry, which is that first move, which is often the hardest one, just because analysis paralysis, or, maybe they look to the right and don't see somebody that's there that has done it. So that's why those, real estate investment groups or meetups or active duty passive income is so powerful, because it can help just break that initial energy needed to take action. And, worst case, you have an asset that you paid cash for that ultimately down the road is still there. So it's so powerful. I'm going to cut myself off, but I love it.
No, that's awesome. Yeah. That's been one of the most rewarding, I think, parts about teaching this stuff is just seeing members succeed. For us, it's like literally that's the driving force behind ADPI. Like every single, like even like weekly meeting, it's like rooted in, okay, does this ensure higher probability of member success, right? Does this build their confidence? And like a lot of our education, because you were saying you're a sailor, he probably started cooking some extra good food for you on the side for helping him out, I bet, right? But like
No.
you gave him that confidence. No. But you
he
gave him a lot of
that's
confidence, probably.
He did. He did. He gained the confidence. Like he had I didn't teach him anything. I just pulled some of that knowledge out and that, confidence to take the action. So knowledge is power. He learned a little bit during that deployment and took action. And, I don't know. I need to do a follow up with him and see how he's doing now. But
yeah, maybe that'll be a good case study. I love that.
Yep.
From a single family home, then to a duplex. I mean, that's 3 units. I mean, that could very well be life changing. You don't have to do anything. Just like keep renters in it. Just keep renters in it. 30 years later, life changing.
100%. You nailed it. Absolutely.
So, wow, gentlemen, any saved rounds, as they say in the military, anything you want to like say that you feel like we haven't talked about, any golden nuggets for our community, for your community? I'm all ears.
I say, go ahead, Jared.
So if you want a Facebook page, just a way to get content out there, to get to build that community, to build that trust, confidence, knowledge, all those things. And if you want to take it a step further and learn a little bit more about what we're doing here, what you may help come up with a plan for a year down the road or 2 years down the road, like we're here and ready to have those conversations.
That's awesome. Yes, I've been seeing you getting very active. So that's awesome. Building that rapport and trust in the community. Guys, we have 80,000 members in our Facebook group, absolutely free. If you're not there, jump in. Jared's going to be there helping you with it. Like if you have questions, hit him up directly, as well as you're going to have 80,000 other members providing their 2 cents. So, or sometimes lifetimes of experience and value. Chris, what do you got?
No, he just nailed it. That was my thing. I was going to tell investors, be patient. You don't have to, if you're here, you're still wondering a little bit and you're like, I'm not quite ready. I don't quite understand everything. It's fine. It's not like, reach out to Jared. We're here to help. Like I said, the most important thing we can do is help get investors pointed in the right direction, especially when we're not the right fit. Those are the people we kind of probably help the most. And so don't worry about it. Don't feel like you have to be ready to go immediately. If we can help, let us know. This is not something that we're like, you don't have to be ready to go right now. Be patient. It'll, when it's time, you'll be ready.
That's awesome. Okay, gentlemen. Chris, Jared, thank you so much for coming on the podcast. Thank you for providing. Honestly, I truly believe this. This is how I think about every podcast. Somebody's life's going to be changed listening to this. They're going to have that light bulb moment because of what you guys said, and the stories you've shared. So thank you so much for helping us impact 3 million military families in the next decade. This is Markian Sich, Chris, and Jared. We'll see you guys later. Tune in for the next ADPI podcast. Bye-bye.